guys, this is Claudia here from the Bookkeeping Experts, back for one more week of education with QuickBooks Online. And today we're going to talk about cash transactions. What to do when you receive cash from clients and then you deposit into your bank account, or sometimes not. Sometimes you have expense with cash. How do we record all those expenses? It's exactly what we're going to talk about today. Okay, without much further ado, here we go with QuickBooks Online. All right, so here we have our sample company, Craig's Landscaping. And the first thing we're going to do is we're going to go to the chart of accounts to verify if we have a bank account called cash on hand or petty cash. So to go to the chart of accounts, QuickBooks just changed the interface of QuickBooks. So you want to click on transactions and then chart of accounts. If your account looks like this, it's gonna be same thing. QuickBooks is just changing the interface a little bit, so business versus accountant view. I always use the accountant view, but sometimes there's like a little difference on how it's set up. But basically you want to put on transactions, chart of accounts, that's where you are. And the first account is going to show up is the banks. See the two bank accounts here, they're both connected because you see those two little arrows. Now we are going to create a bank account called cash on hand or petty cash. And we're going to click on new. You're going to select that you're creating a bank account. And it's going to be on the very top, you're going to select bank account. On the top, we're going to call cash on hand, and we're going to name this account cash on hand. Or some people call it petty cash. Doesn't matter. Either way, it doesn't matter. Now, this account is a bank account where we manage all the cash transactions in here, all the expenses, all the income. But keep in mind that there's no two arrows because obviously this account is not linked to any bank or anything like that. So this is just something you manually maintain. So you have to record all the income and all the expenses to this account, okay? So how do we do that? That's the first thing that we're gonna talk about. So one thing to keep in mind is that if you have integration with Square or with another third-party app, and you're recording those cash transactions in Square or whatever the third-party transaction you're recording it to, when you record those transactions into QuickBooks, it's going to go to undeposited funds. So when it goes to undeposited funds, you're going to record those transactions going into cash. So let's suppose that this transaction here on the 18th it's a cash transaction. It could be check or cash. I'm going to record here cash on hand. And I'm going to say that this money was sent into the cash on hand. Now, if you're creating an invoice and you're receiving cash or check from the client, this is how we're going to record. Okay, so we're going to do, we can do a sales receipt if you already received the money. So we're going to do a sales receipt and we're going to select a customer. And obviously it's going to go to undeposited funds. So that's where the first part of the cash on hand goes to, right? So we're going to put it for, let's see, November 19th. And we're going to go ahead and obviously we're not sending this. So save and close. So we recorded a few transactions. Now the next step, when I create a sales receipt or an invoice, okay, if I was to create an invoice, the process is a little different, right? So you're sending to your client whatever product you have. Let's say this is $100 and there's taxes involved in that because it's a product. So we're gonna save, and you can send it to your client as well. If it is an invoice, means that you haven't received it yet. So you're gonna send it to your client, right? And then you're gonna receive payment invoice. So we're gonna go into that invoice. If I want to see the last one, I can click on here and I can see the last one is Bills Windsurf. To receive payment, we have different ways to do it. We can click on receive payment and I can type Bills Windsurf shop, and it's going to show the invoice that are pending for him. One is the one we just created. Oh no, we created the one for $100. Yes. Okay. So we're going to say that we received the payment. Let's suppose it was check. Eventually, I'm going to deposit this into the bank account. But for now, we're just going to deposit this money into undeposited funds. And then I'm going to deposit into cash on hand. Or if it is a check, however, you may want to just record these transactions to go into the checking account. But if it is deposited, if it is cash, you want to deposit it into the cash account, right? So we're going to suppose that these both are cash transactions, okay? So $75. The date is the same, so I can record both transactions here on the 19th. And I'm going to send it. Make sure you select the right account. So things to look for: the date of the transaction, the date that you recorded that you received the payment. Keep in mind that when I have an invoice, you're sending the invoice and then you have to record the payment. That's how invoice work. Usually you want to create an invoice when the customer has not paid yet, right? So that's why you're creating to send the invoice to the customer so that they can pay. Now, when you create a sales receipt, it means that the customer already paid you the money, so you're just creating a record for the customer and for yourself. So that's what the difference is between sales receipt. And when I record a sales receipt, I don't have to record the payment because the sales receipt is already recording the payment. So that's the difference. Okay, and then of course I'm gonna send it all to undeposited funds, and then I'm gonna select those two transactions, and I'm gonna send it to the right bank account, which is cash on hand. We're gonna save and close, and we are going to verify what happened here. So we're gonna look into our bank account, and you're gonna see all the deposits here. Okay, and let's suppose that now you went ahead and you pay somebody cash. How do I record this expense? So I'm just gonna go ahead and click on the plus new and then expense. A few things to keep in mind. So you want to make sure if you have if you're paying somebody cash, you want to make sure they give you some kind of receipt, so you can attach. You can easily attach. You can send it to your computer and then attach right over here. Okay, so that's how you attach from your computer, or you can send a receipt and create the expense from there. But if you're creating an expense from cash, you can add it right here. So I'm gonna create an expense. I'm just gonna say books by Betsy, and I'm gonna make sure that this account, the payment account, is cash on hand. If not, I'm recording it to the wrong account. So that's very important. This is very important. Okay, so now I'm gonna categorize this transaction. Let's suppose that this is supplies. Okay, and I am going to say that it cost me $150, and I accrued that on the 21st of November. So I want to make sure I put the right date as it is on the receipt, the name of the payee, and cash on hand, and preferably add an attachment for the receipt. Okay, and then save and close. Now if you're paying tips, for instance, it's a little different. Okay, it's a little different because it depends how the tips get into your account. If you have a Square is going to automatically record it as a tips liability, right? So how do you record that you're paying tips from cash to your employees? It depends. So if you're If you have payroll, you want to make sure you match that the tips paid to whatever payroll information you have as far as the cash transaction go. But the transaction itself, you can record it as a transfer, okay? If it is tips payable. So you're going to say that the funds is coming out of cash on hand, and you're paying a liability, which is tips, undistributed tips. Oh, do we have undistributed tips? No, we don't. So undistributed tips is a liability account, and that's where you keep all your tips liability, and it's recorded. Like I said, you can record that when you record a sale, or when it's coming from a third party, it's automatically going as a liability into your balance sheet. Okay, so but that's how you would say that you're paying from the cash on hand and it's going to that liability account. But it's just going to create money coming out of there. Okay, now let's suppose that you go into the bank and you deposit some of the money into the bank. How do I categorize that transaction? Now, it's very important, you guys, that you categorize it as a transfer out of cash into the checking account. The reason you want to do that and not categorize as sales, because you don't want to duplicate your sales. That sale is already recorded in QuickBooks into the cash account. So you want to see that. So you want to go to cash on hand, view register, and look at the deposits here. So these sales are already recorded in here. Okay, so if you click on the 175, we're going to edit it. You see the sales here, and if there is taxes or anything, everything is attached. So you can click on the individual transactions, and then this is the payment. And if you click on the invoice, it's going to show all the details for this deposit. So you already recorded the payment into the cash on hand account. So you don't want to record that transaction that hit the bank that you actually deposit from your cash on hand as a sale, because it's not. So we're going to click on that transaction and we're going to record it as a transfer, and I'm going to say that this money is coming out of my cash on hand. Okay, and I'm going to add it as a transfer, not as a sale, as a transfer, because I do not desire to duplicate my income, because that has been recorded already. So those two transactions, we're going to record that. I actually, let's suppose that there was some checks mixed with cash or whatever it was, but it doesn't matter because I'm going to record it all as coming out of cash on hand. Now let's go back to the cash on hand account. So I'm going to click on transaction. I'm going to go to my chart of accounts. I'm going to go view register. See that the balance on the cash account is lower, obviously, because we are recording that we made two deposits, cash. It could be a combination of cash and checks into the cash on hand account, and then we recorded the expense. First, I paid cash $150, books by Betsy, and then I recorded that the $200 and $55 I deposited into the bank account, and I left $157 cash into my cash drawer so that I can give change to the customers or whatever I need to do with the cash, right? Okay. And how do you reconcile the cash account? Just like any other bank account, you're going to view register and then click on reconcile, and then you're going to put the amount that is in your drawer right over here. In that case, it was $157. We're going to put the ending date as whatever ending date. Let's suppose is November 30th. So that's how much it was, is off November 30th. We're going to select all transactions, and we have a difference in here because it's saying that the total, oh yes, because some of those transactions that I recorded for a different date. So if we duplicate, I think it was December. So we're going to change the date of the reconciliation. Keep in mind, this is just a sample account. So if we click on view register, now I'm going to Some of the transactions, oh, this one is for January 2024. This is definitely a sample account. So let's say that is December 14th. That's the that's the date that we're gonna reconcile by. I'm gonna say that is $212 over here. So first I'm gonna close this without saving, and I'm just gonna put $212 because that's how much money I had as of December 14th. Okay, the date is very important. Now I select the transaction and I showed up one transfer that was not showing up before, and then voila, I have zero difference. I am reconciled for this cash account. Okay, and we're good to go. If you have a list and you want to attach the list to this reconciliation, you click on history by account, click on attach, and then you can attach, if you have like an Excel spreadsheet with all the details of your transactions, yeah, you can do that. By all means, just an extra record of whatever happened on your checking account. Okay, so this is it. So we're gonna go back here. All right. Thank you so much for watching this video on cash transactions. I know that a lot of you deal with cash, and it's very important to keep accurate records of your cash transactions, not just for taxes, because you have to pay your taxes. You have to file your taxes at the end of the year, give it to your CPA, but also to make sure that you have accurate information regarding your financials. So when you look at your financials, is that information correct or not? You want to make sure it is, because in order for you to know exactly what's going on with your business, you need to understand how much money you're making and how much money you're spending, and where is your money coming from and where is your money going to. So very important, extremely important. This way you know exactly where you are on the map, like your location, and then you can plan for the future. You can set goals for the future, how much you want to make next year. Close to the end of the year, that's the time for you to know exactly how you did for the current year, and then start budgeting and start planning to grow your business for the following year. How much money you want to make next year? In order to make that much money, verify what's your percentage of expenses. And what's your percentage of income compared to your expenses? So you're going to maintain the same kind of expense, or are you going to cut back on certain things to increase your revenue or increase your net profit? Or are you going to increase your marketing efforts or whatever it is, and verify if your bottom line is going to increase and by how much, and if it is worth it or not. So very important to understand your financials. Profit and loss is one important report, the balance sheet, and the cash flow as well. So those are the three basic reports you're going to be looking at, but there's a lot of other reports that can help you understand your business as well. So thank you for watching this video and spending this time with me. This was cash transactions, what to do with my cash, that we covered today. If you have any questions, please write down below. We're going to get back to you as soon as we can, usually very quickly. And if you want us to cover something else next time, write down below as well. We're going to get back to you, and we're going to put all the efforts into covering what the questions you have to cover for next year. Thank you so much for watching. Hope to see you again next week. Subscribe to our channel. Share with everyone. Share with your friends. We want to help as many people as possible. I learned all this through the year, and a lot of work and a lot of experience, and I want to help you surpass all that, go straight to the subject and start succeeding right away. Right? So I'm giving that information for free. So share with the world. We want to help you. We want to help as many people as possible. But if in case you need extra help, feel free to contact us so that we can you can hire us for a one-on-one tutorial or train your staff as well. So yes, we can help you out with that as well. Thanks for watching. I'll see you next week. And until next time, keep on smiling.